What's up everybody, Tom here with another video. In today's video, we're talking about the latest stock market news moving the markets right now. We'll also be taking a look together at our technical analysis levels on the S&P 500, NASDAQ, gold, Bitcoin, and US dollar to try to figure out what's going to happen next in the markets. We've got historical news right now, and that could mean for some historical moves later on this year. Let's talk about that and more. Stay tuned. So as a community, we always like to look at the heat map to start off with, and this is the heat map of the S&P 500 and the largest companies in it. We had some pretty nice moves yesterday in Intel, 6.97% off the announcement there, but more importantly, I think something interesting happened yesterday. Utilities started to rise, and this has been a common thing that we've talked about. We talked about it literally on our weekend video, so go and check that out. But basically, we always see these kind of things happen in sectors, especially when a sector has been sitting for some time. In our weekend video, we discussed the fact that utilities had been hovering around basically the same performance for quite some time, ever since it had that run up in October. And now it looks like it's time to shine for the utilities, 1.95% up. And also real estate, 1.37% up, another one of the lagging sectors in the market. We can see that that far outperformed the other sectors there, with most of them flat to slightly up. If we think about the last 5 days of trade as well, you'll see utilities was in that holding pattern, followed by a little bit of a sell-off coming into the 12th, and then we had that pickup, which has brought it back to basically being even over the last 5 days. Now, if we extrapolate this out over the year, you'll notice that for quite a few months, utilities has been in a fairly small band. And again, it just shows you that there's always an opportunity in the markets when it comes to recognizing sectors that could be hot or could be about to become hot in the markets. If we talk about the broader markets overall, NASDAQ was the outperformer in terms of broader markets, 0.63 up, bit of a sell-off into the end there after a nice pickup through the mid-session. And of course, we also had the Dow and S&P 500. But what I want to talk to you guys more about is historical returns. And of course, we're in historical times. So what might be happening here over the next year? Well, I want to point out a few months here. We know that January is generally a positive month. We also know that February is one of those months that's been quite negative over pretty much all of the stock market from 1928 to 2020. Then we had May. We've got usually that sell in May kind of effect. It's been less likely to occur though over the last decade. And then of course, September, August, October, usually pretty bad months to be trading in the markets. But I want to point out a few things. April, what a month to invest. July, what a month to invest. It's been very solid. And if we go through here and we go down to the last 10 years, notice something that's happened in the last 10 years. Very strong returns at the April and the July kind of area into even August. But what we have is some serious weakness around Feb into March. So if that continues to be the kind of area, and obviously the March figures are a little bit skewed here, but Feb in particular has been a very weak month. This could be the year that we see again, the February sell-off, followed by, of course, possibly a very nice April investment period. And I think that's something I'm going to be looking at. We know seasonals play out time and time again in many markets. And just to talk about those seasonals, we obviously saw one come through that we pretty much correctly predicted as a community would happen due to this China Lunar New Year, and also, of course, the rise of Bitcoin once again as a cryptocurrency. If we have a think about it, there was usually a fall coming in around that 12th to kind of 16th of January, pretty consistent throughout all of the years as we discussed on the channel. And then we often do see a spike up and then a more of a flattening of price. So really what we're looking at possibly right now is basically something like this. We had that initial sell-off down just to above 30,000 on Bitcoin. Then we've had that spike up movement. And the question now becomes, is this more of a blow off where we get a continuation back down to potentially test those lows again and find the buying pressure, followed by stagnation through Lunar New Year? Remember, Lunar New Year this year is 12th of February, and then we get that nice incline. Generally around Lunar New Year has been a very good time to invest in things like Bitcoin, as you get that stagnation through that week, followed by a very nice movement up after that period. So it just proves that seasonals seem to happen time and time again, and a lot of people follow them, and they're worthwhile having in the back of your mind to marry up with, of course, the price action of the charts. And talking about price action, let's talk about dollar index first. So we had a trend line coming down here, and this was based on things like the 20 exponential moving average on the daily time frame. But I want to talk about what's happening here on the smaller time frames right now. Well, we hit the 90-70 zone. 90-70 was 2 resistance levels. Of course, it was going to act as resistance again. We pretty much knew this. We talked about it last week. Great level for people to basically exit their dollar long positions at that point. Then we saw market structure come back into play where it pulled down and it found previous resistance levels, and was really the first touch of this zone, by the way, because remember when it closed above, it barely even came back. It just went straight back up. It's touched it, it's found support, found buying pressure, and then it's gone back to the new little level of structure which it needs to break now. Now notice we had previous little bit of support here on the smaller time frames. That's now acting as resistance. But if we get through and we close above here, I mean, of course 90-70 is still going to be resistance, but at the same time, it's more likely that this 90-70 is probably going to break. The market has considered this level, it's found buying pressure. It's also on that trend line trajectory on the way down, which it's now broken through. It's found the resistance, it's found the buying pressure, it breaks through this mini resistance. If it does that, it's probably going to put severe pressure under 90-70. And of course, that allows for people to pick up, potentially roll reversal off the 90-70, a close above 90-70, pull back, further dollarish movement. So this is an incredibly important point here for dollar movement across the board. If the dollar can get above 90-70, we could be looking at not only 91.10 next resistance sustainment, but possibly even back to 91.50, 92. It could put the dollar bulls back in control. This is the critical time where they need to do it. Now we get back under 89.90 down here, this 93. Where do we go? We probably go test all the way down here at 89.20 and potentially go to the previous kind of weekly low. If we have a look here, we pull up the weekly, we could be going all the way down to at least 88, 85 or lower. So there's some critical points here on the dollar, and I'm talking about it so much because I think it has a lot to do with Bitcoin. It has a lot to do with gold and silver investments. If we take a look at gold, gold's struggling after that initial sell-off. Of course, now we have a very clear level of resistance, 1860. We also have a little bit of a trend line on the smaller time frames here that we can see that's been pressured up. So we've got two very key points between really the top here being of gold, 1860, and this trend line moving up. A break either way is of course going to then put pressure on the next level. Gold will go up to the 1880, find some form of resistance, and if it breaks below here, it goes and tests the lows again. And of course, any low test taken here, potentially back down to the 1760s. So gold's got some nice critical levels on it, and it certainly has a beautiful little resistance appearing here on the smaller time frames. Look at this 2 hour. You can just see that this is such a critical point. Market moves up, finds the 50 exponential, finds resistance at the same time, potentially comes down, tests the trend line, goes up, breaks through. What have we got? An ascending triangle. So lots of pattern structure forming here, guys. And this is the type of thing that gets me excited about the markets. Lots of great technical structures happening over the January period. Pretty rare, actually. Not often we see good technical structure over the January period. We've got silver, very, very similar. Resistance, like gold, probably look at gold as your key lead. And then, of course, if silver goes through and breaks to the new high, it's going to be more aggressive than gold as a percentage move. Remember, silver is more like the altcoin of gold and silver. It moves as a higher percentage and gives you more reward, but of course more risk at the same time in percentages. We still remain pretty medium to long-term bullish on silver. Things look relatively good for it. Of course, demand in the real world. I'm still more bullish silver than I am gold, but overall things are looking up a little bit, and we're just talking about this resistance structure here as a very important zone for both gold and silver. Now, Bitcoin is an interesting one because, as we all know, Bitcoin really got through some serious levels and it came down, it tested the previous lows, which is what we did suspect it may do. It found kind of those 30,000 area lows, 30,296 is what we've got here. And then it's found the lightning bolt up. Let's get rid of these lines here for a second and just talk about what's happened in price action so far. So generally with a blow off, you get a sell-off, followed by a very quick recovery, followed by, of course, a big sell-off again that can maybe be a little bit more gradual. What we've got here is a sell-off, followed by a pickup, followed by another sell-off, and then it's actually closed and made a new high on a significant time frame, being the 4-hour. It's in the zone though for now. We basically see whether this is the beginning of a larger blow-off event. We had the big sell-off. That 30% sell-off is intense, and of course that's the type of thing that generally does mean that the market is getting unstable at these levels after its big move up. But we're back into the 61.8 fib test here, and we know that any good blow-off will blow off in this area between the 78.6 fib and the 61.8 fib. This is the area or the zone that generally the market will respect, and then it will sell back off. So we should know within the next 24 hours whether we're going more into a blow-off event or whether we're going to actually crack a new high. If it gets past this 78.6, it's probably not even going to care about the previous resistance. It's probably going to go and blast to new highs, and that's going to be very, very strong for Bitcoin and altcoin traders as well, because remember, this is the sentiment. So we've got the lightning bolt. We don't have the traditional just big flick up followed by further sell-off, and things are all about this little zone in here. If we see the sell-off event occur again, we go back down most likely to the previous lows in a bit of a dribble. And if the bears fail this point here and it moves up above, most likely it takes out the peaks. So very interesting point for Bitcoin, just like all of these other US dollar denominated pairs right now. So let's talk about the stock market. Of course, the stock market's always interesting. Heaps of historical news going on right now and heaps of big political things going on. Do they matter to the stock market? Well, the stock market would have a say, not really. There's a bit of consolidation happening here. We've still got our trend line through the top here in terms of we could extrapolate that out for resistance, potential take profits. If it gets here, etc., it comes down, gets here, and it seems to be following a 20 exponential moving average as well. We've found support on this a few times. So we found support here, probably going to find support each time. And we're still looking for a 20 exponential break below before we could say anything is looking bearish. We know that January is historically a really great month. We also know that February over the last 10 years has been a weak month, a crappy month for investment. So we're starting to look for cues of maybe the market getting ready. I saw even a few people watch and follow, of course, ARK Investments. They follow Cathie Wood. Even she agrees, and I totally agree with her on this, that we've had a historically amazing return in many sectors. We've had that V-shaped recovery. She's been pretty good at picking the markets in terms of the more over the top kind of medium, longer term aspects. And she even thinks there's going to be a big pullback this year. So will February be the next pullback? It's certainly worthwhile considering in your analysis right now. But the market's still telling us, price action based traders, we are bullish in terms of trading right now. In terms of investing, we're cautious, of course. And you look at things like the NASDAQ, it's the same thing. We go to the daily here, it's the exact same thing. 20 exponential moving average has still been this buy zone. We're going up in a bit of a channel here. We've clearly got a trend line that we can draw through the tops here where we can find resistance each time it goes up. And I think that's probably the way we're playing the market right now. There's no real other way to look at it other than it's bullish until we get through these key levels with body breaks on the real markets. Remember, real markets, not the futures market like we're looking at here. We want real market closes underneath the 20 like the SPX. Real market closes underneath the 20 is the key. All right, guys. Well, I hope everyone's enjoying their week, having a good time, and obviously getting some great opportunities in the market. I think there's plenty of opportunities still in some of the sectors. And remember, things like utilities as well, if we do continue to see that run, often can be a bit more of a defensive area in the stock market. So it'll be interesting to see if more money piles into those over the next couple of days. If you enjoyed the video, remember to subscribe and of course give us a big thumbs up, and we'll see you in the next video very soon. Bye for now.